Shares surge as the economy is locked down. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to have a look at an article from Yahoo Finance which is, well, highlighting the fact that the stock markets are rocketing to the moon even though the economies are locked down. It's almost shockingly, the stock market isn't an accurate representation of what's happening in the economy. I know that's ludicrous, everyone. I know that just doesn't make sense. I need to have a coffee now to relax from that. I mean, let us know in the comments your favorite stock tips or hints, everyone. Actually, I'm about to make another purchase of some shares on the US market for my dividend investing pocket money. So any hints, I'd appreciate. I'm running out of suggestions. So let's start by having a look at this article. Lockdown costs the economy $25 billion, but shares are still surging, and here is why. Now, before we look at this, let's jump here and we can see this is the ASX 200. And there you go. We're now at 7,527. This is an index of top companies in Australia, top 200. And remember this, guys. Remember when the stock market just crashed? And looking at all this news and these, and this is where we watched that, read that article the other day about the young guy who worked himself to the bone, and which you can do when you're in your 20s. You know, you got that energy. It kind of fades the older you get, or you just don't care that much anymore. But though that's beside the point. This is how he made his money to get that house deposit, guys. He put money in the market too, so don't forget that. I know a whole lot of people are going, oh, the numbers don't make sense. Yeah, of course, it's a bit wishy-washy. Of course, they're playing it up there for the media. I'm sure he had more cash stashed away and he chucked it in the markets and made a lot. But we can see as well, the S&P 500, I mean, there you go, everyone. Okay, look at that. We're all-time highs. There's that big crash. There's that surge. Is it going to keep going? You know? So let's look at this. So, over the last year, the Australian share market has continued to hit new heights despite the resurgence of COVID-19 lockdowns. Well, what else are you going to do with your money? If you're stuck at home, you're saving for a house deposit, you're earning nothing in the bank, maybe 1% if you jump through 50 hoops, if you're lucky, or you put it in shares. You might get lucky, put it in Fortescue, get a beautiful dividend. I don't think it will last, but still. Or get unlucky and put it in AGL just as they're about to tear the company apart. Isn't it fun? That's why you diversify, everyone. Anyway, but why? When lockdowns have cost the economy around $25 billion since May, other markets undeterred? According to AMP chief economist Shane Oliver, optimism is being born from both the last rebound and the knowledge that another rebound may be on the horizon. And it looks like we haven't hit that recession, at least not yet. This last quarter has come good, but we'll talk about that in another video, what actually saved us, or what the majority of our growth was from. I wonder if you can guess. While it may seem perplexing, there are good reasons behind the resilience. So far in share markets, earnings news has been strong, with investors cheering the return of capital via dividends and buybacks from several companies, Oliver said. Well, yes, we're seeing that from CBA is doing a buyback. Some of the other banks are doing buybacks. You've had really good dividends coming out. I mean, Fortescue is the one that's on top of my mind. I mean, even AussieBroadband, they've just broken $4 and they're looking at doing acquisitions next year. Last year's experience shows that the economy will bounce back strongly, helped by massive fiscal support. And that's the thing, everyone, because, well, this is, nothing's without a cost. You can be frustrated, you can be angry, but you know it's going to happen. So you've got to position yourself to take advantage of it. Maybe that can offset the future tax burden of your grandchildren. You want to leave them a legacy, a dividend-generating legacy. You just need to make sure we don't get that bloody wealth tax, So let's make sure Labor doesn't get any ideas that they can get a wealth tax in. Or a death tax. Also, monetary policy may now be easier for longer. Vaccines show light at the end of the tunnel. The vaccine rollout in Australia while slow to start off with, has picked up a lot of momentum in the past 2 months. And Oliver points out that other countries with a high vaccine rate are allowing their economies to open back up. The good news is that around the world, vaccines are working, less so in preventing infection and onward transmission, but practically so in preventing hospitalization and death, Oliver said. I mean, that's the thing. You can get to the point where the hospitalization rate and the ICU load is manageable, then feasibly you should return to normal. That should be the end goal. I'm hoping that should be the end goal, and I'm sure everyone would just want it to get to the point where you've got so many people vaccinated, you don't need to worry about these stupid ideas for vaccine passports, all of this stuff. You know, if you can handle the hospitalization, that's the dream. At least I'm hoping. Highly vaccinated countries are shying away from new lockdowns. And Australia may be next to join the fun, with experts estimating we will reach the 70% vaccination target by mid-October. Hitting that high level of vaccination will require a bit of a carrot and stick. Restrictions on what the unvaccinated can do appear to be the way in Australia, Oliver said. And that is good news that it will provide support for equities. While shares are at risk of a short-term correction, possibly on Delta concerns, and the Fed moves closer to slowing its bond buying, we ultimately see the rising trend continuing. The economic rebound is on the way. Oliver predicts Australia will see an economic rebound by December this year if all goes to plan, and early next year if not. Pent-up demand, supported by government pandemic support payments, are anticipated to be spent, and we expect GDP growth through next year to be well above 4%, albeit that will come with a lower base than previously expected, he said. And he is not the only one who believes a rebound is on the way. Reserve Bank of Australia Governor Philip Lowe also shares the sentiment. The economic recovery in Australia has been stronger than was earlier expected. The recent outbreaks of the virus are, however, interrupting the recovery, and GDP is expected to decline in the September quarter, Lowe said in the August statement on monetary policy. The experience to date has been that once the virus outbreaks are contained, the economy bounces back quickly. Prior to the current virus outbreaks, the Australian economy had considerable momentum, and it is still expected to grow strongly again next year. So, everyone, what is the solution and the takeaway to all of this? Well, let's jump on the soapbox and have a look. Well, here's the thing. If we're going to have a bounce back and the stock market is going to continue, and if these predictions are correct for next year, you want to position yourself to take advantage of it. Remember, we saw all the predictions from the RBA, from the banks, everyone, of the market correcting, or the housing market correcting for one. And remember all the predictions of the stock market correcting and collapsing. Well, it went down and it shot right back up again. You've got all these people predicting Bitcoin will be the future, gold will be the future, silver will be the future. What do people do in Australia? What are they concerned with? They'll be happy with their shares, and they'll be happy with their houses. They'll be pumping money into that and to houses. Will we have a big bounce back next year? Probably. If it all keeps going, if they get it under control, if they get the vaccination rate high enough, if they get if they allow the economy to open up, then people can get out there and spend and be active, then yeah, it's going to bounce back. There'll be pent-up demand. Wait till you see renovations. I bet you will see a growth in that as well. So it's definitely going to be interesting, but it's not going to be uniform. We're going to have such a spread in the economy. There are going to be some people that have money to burning through their pockets, and there are others that are going to fall into a lower class structure. They're just going tough, and they're going to hit it. So what's the solution takeaway? Prepare yourself, position yourself so you can take advantage of a bounce if it happens. Diversify so you're not overly exposed to one sector or the other. That'd be the best advice I'd suggest. And go along for the ride. Because, remember, don't forget, we've also got an election. We can't have a recession before an election, can we? They want to palm that off on the other guy. We'll have to see, guys. Thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. you can sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. I'll see you next time. Bye for now.